traders, welcome to the TMT Stock Market Strategy video for Thursday, July 21st. Well, markets continue to move higher, making new all-time highs on absolutely nothing, no volume, no reason for the new highs. However, that is not why what we trade, right? We trade what we see what price does, and we follow what price is doing. However, we have to be kind of mindful on where we are on the charts, and we're extremely stretched in the short term, extremely overbought, even on a daily chart. So what I want to do is I want to dissect the VIX. I want to show you the put-call ratio and see where we are on the charts. We are so ripe for a market pullback, guys, but I do believe, remember, the markets are made to fool the masses, and the first thing that I always look at in question is, why is the market up here? The market, should the market be up at these levels without any sustainable pullback or any type of pullback? And the answer is no. However, that doesn't mean that I wouldn't play the market to the long side. As trend traders at TMT, that's what we do. But you have to be mindful of where you are here. You just can't blindly just go out and look to buy, right? We want to trade high probability trades. So if the market isn't doing equities, you look for other asset classes, maybe such as gold or oil or whatever bonds, whatever interests you. That's what you should be doing. I'm hawking the market for a pullback. I do believe the markets are ripe for a pullback. Seasonality, we come into a weak time in the equity markets between now and now and October, which I do believe making these all-time highs. But that doesn't mean because we're at all-time highs you short the market. Markets can continue to go higher. You need a trigger, and you need to follow your trading plan. So when you do get a trigger, that's when you look for markets to pull back. Okay, that's what I'm looking for now. My trading model, still, believe it or not, is 50-50. It was much higher on the short side, and then as the markets broke out, it reduced it. So when you're 50-50, I like to see when my trading model gets anywhere over 60%. That's when I start really getting excited about looking to get short and or long. And right now it's 50-50. So it's basically, there's no edge. So for me, I'm being very, very selective in what I do during the course of the trading day. All right, so put call ratio right in front of you, extremely bullish. We are still bullish, and every time we hang at these levels here, you have to use caution. You got to say the bulls are totally complacent. And it could be one day. It could be one catalyst. This morning, Mario Draghi speaks at 8:30. Maybe that's it. Bank of Japan said there's no helicopter money. Market sold off a little bit in the overnight. Real small, not a lot. But this is what the market is Fed induced on paper money, right? So if the money continues, the market tries to continue to go higher. But eventually it's going to stop. And we don't know when, but you have to say we're very, very close. It's just crazy that the Fed lets the markets rise this high on nothing, and that even a pullback. And that's what scares me, because when the markets do decide to correct one day, it's going to be nasty, and that's something that no investor needs to go through. And it's shameful that what the Fed does in these markets, but it is what it is, guys. That's what we do, and that's how what we do every day. We look to dissect and take advantage of what we see on the charts. So very, very bullish here. Okay, very bullish. Now, stocks above the 50-day moving average. And I'm only going to show you one here. Very, very extended. We're at 88%, 86% of stocks that are above the 50-day moving average. Okay, so this is very extended, and when you get to these points, you have to say, I gotta watch here. What am I doing? I mean, do I really want to be long here? Now, of course, when you're day trading, you're day trading, so you'll be long. If you're wrong, you're out with a small loss. Not a big deal. That's part of the game. All right, now let's dissect the VIX. Okay, I want to show you a couple different charts. Here I use price channels on my VIX. There's a couple of two ways and Bollinger Bands, but I want to show you, and I mentioned to you, anywhere below 12 and a half and 21, you have to be mindful. And I mean, this is, remember, inversely correlated to equities. When we're down here below, you have to watch this closely, because this will go on a buy signal soon. It's not at the moment, because if you could see here, RSI is not quite oversold, and slow stochastics has not crossed over. It's bottomed, but it hasn't crossed, and MACD did not as well. I'm looking for positive divergence right now in the VIX. We haven't got that yet. That tells me that equities could probably push to 2200, like I've been mentioning for the last couple of weeks. I know it's not impossible. We're only about 50, 40 handles away in the ES. So I'm looking for some clues on the VIX, but this is dangerously low for the bulls. Too complacent. Okay. Now let's take a look at my traditional chart here. This is, oh, excuse me. You know what? I don't have it. I'm sorry about it. But you know what? If you had the other chart that I showed, oh, here we go. Okay. Sorry about that. But this is the traditional chart that I've been showing you for years and years, and this is the VIX, the VIX with the Bollinger Bands. The Bollinger Bands are way down here, so there's plenty of room to go to the downside before it gets outside of the band. So technically, one of my buy signals in the VIX. And by the way, guys, we have a VIX automated trading program that we finally automated. I was trading it manually, but you should definitely check it out. It's going to be on the website soon. We're going to be putting it into the trading room as well. Rates are going to go up, by the way. $49 introductory special is going back up again. So check it out. Take a look. Stop in. And you're going to be amazed by what the VIX is going to be doing. We're going to be putting that out sometime next week. But something really exciting. Now, the VIX, you don't want to trade every day. When we have an inside day in the markets, the VIX not going to do anything. It's just going to deteriorate with the contango issues that it usually and always has. But you can see here, no positive divergence, but this is a dangerously low, so this needs to be monitored closely. Okay, now this is the VXX. This is the one of the system what it trades, and Bollinger Bands are starting to tighten here. But again, we still have no positive divergence yet. We have higher highs and higher lows on our indicators, but it needs to start to curl up. Okay, and this is, if you notice, you see how this what happened here. Look at this pattern. This is happening here again. So I'm going to watch in the next couple of days if we start to get an explosive move like this back up again. All right, maybe one more push lower. Draghi says something positive. Markets move up to 2190 in the ES or the S&P cash, right around that area, and that's when I'm going to be looking for a big dip lower, big red candle lower, and then the next day takes it back. That's going to be a very good buy signal. Okay. All right, let's take a look at the state of the markets here. You can see we're grossly overbought, even on a daily, way away from the 21 EMA, SMA, excuse me. So you see how that 21 caught up to the 38% retracement. That's going to be your logical spot. A very big area of support, which was resistance. So I'm thinking it's going to pull back there, and then we would need to reevaluate. But equity markets right now, again, confirming we are in a seasonal time of weakness going through October. The VIX is in a seasonal time of strength going into October. So you have to look for that low in the VIX and the top in the S&P. Just logical as equity traders. All right, 60-minute spider. You could just see here we've just been consolidating. Yeah, we did push up a little bit, but you could see we did nothing here. Okay, 30-minute Bollinger Bands are continually tightening, and then you could see that we did expand a little bit, but really one little move up and we went sideways all day, so not much going on there. And I showed you about this chart, Dow Jones and the transports. Watch, guys, because if the transports break down while the equity markets are going higher and the Dow's going higher, that's going to be your cue to start looking to sell the market. And that's what I'm watching closely. That and the VIX is going to be my two clues with the transports. And you can see here, we popped up a little bit out of that nice bull flag, but we haven't done much here. So we're still, we took at that swing low, but we have not taken these two swing lows. So, excuse me, swing highs. Sorry about that. So we're waiting to see what happens there. Okay. IWM still can't break back above the 120.66, 122.50, 46. So this is something that I'm going to be watching closely as well. Look at the IWM, guys. We've been sideways. So this is going to do one of two things, and the IWM usually does is the Russell. It goes sideways and it's going to explode. It doesn't show you where. Yes, it is positive that we're at the upper end of the range consolidating. So a break above the 120.50, you have to watch and be cognizant that we're going to go higher. And that IWM can take equities higher, at least to that challenge, that 22. And then you would reevaluate looking for a short. All right. NQs did very well yesterday as well. Microsoft did well. So they beat. And then that also helped the Dow, helped technology. Guys, I hope it helps. We'll see you tomorrow. Take care.